So let's actually talk about who the 1% is. So this is a really important place to start because oftentimes when we think about the 1%, we think of ultra wealthy people. We think of billionaires. Hey y'all, welcome back. I'm super excited to have this conversation around who should be on your money team as the 1%. The reason why I'm so excited to have this conversation is because as someone who didn't grow up with money, there were only a couple of people that I knew as money team members, like, okay, maybe the bank should be on there. Maybe I should have an accountant because you need someone to do your taxes. But that is literally just the surface of who should be on your money team. And when you're elevating, when you're growing your revenue, when you're growing your personal wealth, your money team has to evolve. And the people that I now have on my money team 3 or 4 years ago, I didn't even know who these people were or their roles. So I felt like this was a really, really, really important conversation for us to have because half of the battle of growing your business is growing your knowledge. And even if you aren't at the 7-figure mile yet or the 7-figure mark yet in your business, this is information you need to know now to be able to properly plan and backwards plan from who should be on your money team as your money team grows. So let's actually talk about who the 1% is. So this is a really important place to start because oftentimes when we think about the 1%, we think of ultra wealthy people. We think of billionaires. We think of Jay-Z and Beyonce. We think of Oprah, Tyler Perry, Jeff Bezos, Mark Zuckerberg. Yes, all of those people are ultra wealthy, but when you actually get down to the nitty gritty of in the US, who is the 1%, Forbes.com defines the 1% of those who have an annual income of $597,000. Yes, you heard me correctly. $597,000 in annual income. And when I heard that statistic, that completely blew my mind because here I am thinking the 1% is billionaires. Like you need to have multiple commas in your annual income in order to qualify. When reality, the bar is $597,000. You're in the 1%. And so in knowing that information, that probably shifts a lot of things for you because you might have now realized that you're actually the 1%, or you might be really close to the 1%, or your neighbor or your mama or people you know are actually the 1%. And for me, it was an aha because I realized like, oh my goodness, I'm the 1%, right? And I think part of this mindset shift that's really important, and I think why knowing this number is really important, is when you're a part of the 1%, that means that you have to do 1% planning, right? That means that 99% of other folks in this country have to plan differently when it comes to their finances. And so by recognizing when you're close to that 1% mark or you're in that 1% mark, that means that you actually have to start financially planning different. That's so important to know, particularly if you didn't come from money, because you actually might be under planning in your finances, which means you're not actually putting yourself in a position to actually either keep more of your money or accelerate the rate in which you are actually growing your money. So let's actually dive into who should be on your financial team as the 1%. And again, when we're saying 1%, we're talking $597,000 in annual income. And so I'm going to share with you from my personal experience. So I am not a certified financial professional. I think that's very important to name. I'm simply sharing my experience. And I believe that it's important for you to be able to know this information and do your due diligence for your personal situation. So let's jump into it. There's 7 positions that I actually have on my financial team. And I want to share these up with you because again, like 3 or 4 years ago, half of these positions I had never even heard of. Like I didn't even know what they did. And now they play such a critical role in helping me manage my personal and business finances. So the first person that's on the money team is a bookkeeper. So this is on the business side where as you're growing your business, you need someone who is going to help you maintain accurate books. And I think this is where a lot of early stage entrepreneurs go wrong is they wait too late to get a bookkeeper. And now that bookkeeper has to backtrack and clean up their books. And when you have messy books, there's a ripple effect that kind of happens. If you have messy books, you're likely paying more in taxes because you likely are not coding your expenses correctly, which should qualify for business write-offs, which means that you're more likely to have a higher taxable income than what you should. Messy books also means that you are not positioned for business funding because likely when you're going for business funding opportunities, they're going to want to see your business financials. And if you have messy books, you don't have accurate business financials. So now you've just created a bottleneck in your potential to get business funding to continue to grow your business. So a bookkeeper is one of the earliest members of your money team because when you start making money in your business, you should start maintaining accurate books. And that bookkeeper is a vital role member of your team who's going to help you do that. I'm jumping in real quick to make sure that you know about my scorecard, which is the opportunity for you to get clear on what stage of business you're in. Now, if you don't know what I'm talking about, I want you to go back and check out the episode that I have around the 3 stages of business. And I developed this scorecard so that way you can get quick clarity around A, what stage you are in business, and B, the specific action steps given that stage so that way you can execute immediately. So go ahead, scroll down to the show notes, and I want you to click the link for the Get Launch Consulting Scorecard. Take that quiz so that way you have clarity on your stage of business. Let's hop back into the episode. Secondly, we have an accountant. So an accountant is someone who helps you file your taxes. So you likely are already working with someone to help you file your taxes. Hopefully it's not your auntie. If you have a business, it should not be your auntie. So find a professional to help you file your taxes. But the role that accountant plays is to help you file your tax documents in a timely manner and to make sure that those are accurate. And that's one that we're most familiar with because whether you're a person or an individual or on the business side, like you've been filing taxes since, you've been making income. And so that role is typically someone that's not new for a lot of people, but that's a really important role, particularly as you're growing in business, if you file for an S Corp election, which is a particular tax filing, then now there is a second tax filing that you have to do. You have to do on the business side. An accountant helps you manage all of that. Thirdly, you should have a tax strategist. So in a moment, I'll talk about when each of these roles really becomes vital and when you should tap into these roles. But a tax strategist helps you manage in an ethical way your tax liability. So when you hear these examples of ultra wealthy folks who have very minimal tax liability, well, that's because they have a tax strategy in place. And there is a tax code in this country that very clearly outlines ways in which you can ethically leverage the tax code for incentives. And a tax strategist helps you identify, given your context in your business, what are particular tax codes that you could be ethically leveraging to help reduce your taxable income. And I will tell you, my friends, it's not just spend more money so you can write things off. That is probably what most people do I just buy a bunch of things and because they're business expenses, then I can write those things off. That strategy is only going to get you so far and also it eats into your profit. There's other more sophisticated tax strategy that you could be leveraging and a tax strategist will help you with that. Next, you have a CFO, which stands for Chief Financial Officer. So this position comes at a little bit later in business. You don't start with a CFO, but a CFO helps you look forward in your business. It helps you look forward in your finances. So when you think about a bookkeeper or an accountant, they help you look backwards because they are reconciling your past transactions. They are organizing your past transactions or they're filing tax documents for your past financial actions, versus a CFO helps you look forward. They help you look at predictions. They help you look at projections. They're looking at your cash flow to help you determine, do you have enough money on hand to be able to hire that position that you want to hire in the next 3 to 6 months? Given the amount of cash that you have on hand and given the trends and patterns in your business, how much cash do you have to last you for how long? So you might have a cash flow projection of you have enough cash on hand for the next 3 months. And so what needs to happen in the next 90 days for you to keep having cash on hand to keep moving in your business? Or they're looking at what are some of your upcoming business activities, and let's help you predict what cash will be coming into the business. What are your upcoming expense obligations? So they're helping you predict what is the future financial state of your business to help you take action now. A CFO is really critical when you are at the 7-figure mark and beyond. And oftentimes when people hear CFO, they hear a full-time position. Most businesses who start with a CFO relationship are not hiring someone full-time. They're usually starting with a retainer relationship where you retain a CFO professional to help you in that area of your business. And I think it's important to name that a CFO is not the same as an accountant, which is not the same as a bookkeeper. They could all be different people, and sometimes these people play in the same sandboxes. So there are some accountants that will attempt to play in the CFO sandbox when actually they're accountants. And so this is why this knowledge is so important, because you have to know the role of every single professional on your team to be able to know when someone's not playing their role appropriately for you to be able to manage them appropriately. So there are some accountants who might say they're bookkeepers, or some bookkeepers who might say they're accountants, or some tax strategists who might say that they're bookkeepers, and they're actually not. So this is why knowledge is so important, for you to be able to know, if this is the role that you say you play, this is what I should be expecting. And the moment that that's not happening, that's when you need to have that feedback conversation. Okay, next we have a financial advisor. So a financial advisor helps you on the personal front, helps you with your personal finances and advising you with your personal finances. So they would help you from a budget standpoint with your personal investments. They would give you some advisement on your personal retirement accounts. They could help you set out a plan of what are you doing with your personal money. So a financial advisor really plays in the sandbox of personal finances. And I think the gray area that exists when you're a business owner is oftentimes your business finances are somewhat intertwined with your personal finances, which is why it's important that your money team is communicating with one another. Because even though my financial advisors are with my personal money, they still have to be aware of what my tax strategist is advising me on the business side, because it still has personal implications. So that'll be another piece I'll talk about here in a moment, but these people should not be operating in silos. They actually should be having conversations with one another. All right. Number 6, we have a wealth manager. So your wealth manager is a little bit more sophisticated than a financial advisor, because your wealth manager is now answering questions of what does it take to protect and grow your wealth. So a wealth manager would be advising you on what are some types of structures that you need to put in place with your personal finances to help protect your assets, to help grow your assets. So they would be supporting you around strategies related to trust, related to holding companies, related to, do you need to create separate entities in your business to help protect your assets? So a wealth manager has a little bit of a higher level conversation to help you really create and structure your wealth portfolio such that, again, we're protecting assets and we're growing our assets. And then lastly, and this last position, this 7th position, I think is most underrated, And it is most critical when you get to the 7-figure mark to keep accelerating beyond the 7-figure mark. And that's a personal banker. And I want to be clear between the difference of a personal banker and the teller. So they are two different people. So when you walk into the bank, and let's say you're walking into the bank to withdraw money from your account and you go up to the counter, you are talking to a teller. That is not a personal banker. So the easiest way to kind of differentiate between a teller and a banker is where they sit in the bank. So a teller usually sits behind a counter. A personal banker sits behind a desk or an office. So a personal banker is someone that you need to have on your money team who you have a relationship with, who knows your business, who knows you personally, to help really be an advocate for you and a liaison with you to the banking institution. So they should be able to almost kind of like quarterback your financial needs within that financial institution, to where if you want to purchase a commercial property, if you're looking to get a line of credit, if you are looking to get a business loan, they can really quarterback those efforts to help get you to that outcome or finish line. That I think that's why that relationship is so important, because I've had lots of conversations with folks in my circle, and even I have had the personal experience of not being with the right personal banker, to where they've actually made it harder than it should be, to where I'm an asset to this financial institution, to where you got more to lose than me. To where you should be quarterbacking on my behalf. I actually shouldn't be working hard to figure out your products. You should actually be presenting that information to me to actually help me navigate your institution. So that personal banker is key, because that could be the difference between you being able to secure a commercial property with ease versus you going through hoops and loops, and now it's months and months of trying to secure your next financial investment with the assistance of a bank. All right, so those are our 7 positions on the money team. We got the bookkeeper, we have the accountant, we have our CFO, we have our financial advisor, our wealth manager, tax strategist, and personal banker. So I think it's important just to name, okay, when do you get all of these people? Because you don't start with all of these people. I definitely did not start with all these people. Like, what's the order of operations in terms of when should each of these people be joining your team? So let's just break that down. So the first people that you should have on your money team absolutely should be a bookkeeper and accountant. So the first person, if let's say you make $10,000 in your business in a year, you still need an accountant, because someone's going to need to file your taxes, right? So that's usually the first person you have on your money team. When you are starting to approach your first 6 figures, that is when you need to look into actually hiring a bookkeeper. And the reason why I say when you get to that first 6 figures is because that is when your financial statements are going to get a little bit more complex. Like, they're not super tricky, but you now need to outsource, because you likely have more sources of income and or more sources of expenses when you're now at the 6-figure mark, that it no longer makes sense for you to be the one, particularly if you do not have a financial background. And even if you do have a financial background, you still need to hire a bookkeeper to help make sure that you have accurate books. When you get to, I would say, about $250K in annual revenue, that's when you should tap into a tax strategist. And if you tap into one earlier, that's even better. But I would say that's when it's like, okay, you actually need to start talking to a tax strategist at around $250K in annual revenue. Because remember our 1% threshold number. We said our 1% threshold number was $597,000. So when you're at $250K of annual revenue, like, you're halfway there, right? So when you're halfway there, that means you halfway to some tax liability, increased tax liability, which is why that tax strategist becomes so important at $250K, because that's when you need something more than just spending money as your tax strategy. I would also recommend at that stage, if you don't already have a financial advisor, to start tapping into the financial advisor, because that's usually the stage where you start having more disposable income than you've had previously, and they can help you make some decisions around what to do with that personal income. Do you invest it? Do you put it in retirement accounts? What are some personal budget strategies that you might put in place just to help you maximize those profits? And then lastly, the 750K to $1 million and plus is when you want to be bringing on that CFO. You typically don't need a CFO earlier than that. A CFO is now when it becomes absolutely critical for your business that you need predictive data and predictive reports. That's usually around that $1 million mark is when you need to start bringing on a CFO. That's when you want to begin establishing that personal banker relationship if you don't have one already. A personal banker, it's great if you can start establishing that relationship before. So whoever you're currently banking with, go ahead and schedule an appointment with a banker and introduce yourself and learn more about their products, right? No, there's no greater time than today to start building that relationship with a personal banker. When you get to that 750K $1 million mark, that's when it becomes pretty necessary to start those conversations, but the earlier the better. And then lastly, the wealth manager. At that 750K $1 million mark, you want to start bringing in that person too, so that way you can have them at the table having those conversations with you, because again, you have more disposable income that you've ever had before. It should not be sitting in a savings account. Like, you should be having conversations with these financial professionals to help you make those types of important decisions. So a couple of last things just to note here is that there are some people, again, who could be playing different roles, but they're the same person. So you might have someone who is your bookkeeper, who also files your taxes and also gives you some tax strategy. Those could all be one of the same person, right? I do think it's important as you're continuing to grow your business that you, as much as you can, diversify the people on your financial team as a checks and balance. So I think it's great if the person who files your taxes is not the same person who manages your books, because it's a checks and balance, right? Because now they can be, almost for lack of a better term, be auditing your books to make sure that things are the way in which they should be. And then because there's a lot of crossover that happens with these people on the team, it's really important that you are actually having meetings with these players collectively. So I actually have money team meetings probably about twice a year at minimum, where we just all collectively talk what is the financial strategy for this year, particularly from a tax standpoint. Because if my tax strategist is recommending a particular tax strategy, that's going to have an impact on my taxes. So my accountant needs to know that. My bookkeeper needs to be aware of it. My CFO needs to know, because if it's reflected or impacted in my books, they're going to need to have context to what that strategy is. My wealth manager needs to be at the table, because that will likely be impacting my wealth portfolio. So because all of these people impact one another, you should actually be having meetings with this entire team at least twice a year, just so that way everyone's on the same page. So it's my hope that through this conversation, you were able to gain some new information, some new nuggets. Let me know your feedback from this. I'd be really curious to hear from you if there is a position that you heard that was new for you. That would be really great feedback for me. So let me know in the comments what stuck out to you, and maybe an aha that you would have had, or additional questions. I would love to hear from you. And if you enjoyed this episode, subscribe so that way you can hear the next one. We'll see you soon.